Welcome back everyone. This is a brief update about the gold market. The impressive run higher continues for gold in 2020. As in the latest daily sessions, the precious metal reached new 7-year high levels. Gold could be among the instruments with the highest gains since the start of the year, with an increase above $150 in total, while some analysts believe that the bull run is not over yet. Some of the most important news that relate to the gold market are detailed below, with a final conclusion as a closing. We will make a small reference to the coronavirus, due only to the fact that gold traders could be using this matter as the main reason to purchase gold, thus the price has rocketed. The virus has now been identified in countries like Italy, Iran, and South Korea, with some confirmed victims already. The uncertainty has risen significantly as the virus keeps breaking into new countries. However, information based on all 72,314 cases of COVID-19 confirmed in China, 14.8% of the deaths are regarding 80 years and over, and that is the highest percentage on the death rate so far. So as the age drops, the percentage of death drops as well, which means that so far young people may have stronger cells that resist the virus. In any case, our opinion is that the emergency of the situation is causing authorities around the world to fight back on the virus, while we are also positive that a vaccine will be introduced much sooner than expected. China alone has confirmed it was setting aside an amount of over $12.8 billion to help counteract the situation. Furthermore, some analysts brought out the idea that the current economic weakness that is prevailing in China could affect its trade with other countries, but especially with the US. The main idea here is that the Phase 1 deal that was very recently agreed on the US-Sino front may be interrupted. US officials stated that until now no material impact has been noticed on the US-Sino deal, yet the market's reaction could be changing depending on headlines in the next weeks or so. Moreover, in the past daily sessions, we have seen a huge outflow of money from the stock markets from all around the world as investors' worries over economic weakness due to the disruption of supply chains seem to be growing. These are the perfect circumstances for gold's ability and traditional usage as a safe haven and hedge potential losses. Yet gold's upsurge has been so steep lately that we are getting the idea that some big financial institutions are buying gold and other smaller traders are jumping in, following the trend, making the swing even larger. All the pre-mentioned information, however, is fueling the bullish momentum for gold's price, and we would advise caution when engaging the market, as the instrument has traditionally been associated with high volatility and holds great risks due to its fast-moving nature. As a closure, some important financial releases from the US coming up in the next days could be gold's price movers according to previous trading activity. On the 26th of February, we get the new home sales units figure, while on the 27th, we get the durable goods and GDP second estimate. On the 28th, the consumption adjusted rate and University of Michigan sentiment final reading are due out. Moving now to the technical analysis, and this is gold's 4-hour chart. Gold is currently trading between our R1 1653.05 and our S1 1636.90 level. Please note in last week's report, gold traded below the round level of 1600 and has performed a run of over $90 only to correct lower for the time being. The possible levels moving upwards in our opinion could be first a brief approach of the R1 1653.05 level and then a move towards the 1671.75 resistance level. Should the bullish momentum continue, our top level for a continued bullish scenario and for the time being remains the highest level reached in 7 years, which is practically our R3 1686.90 R3 resistance level. In case of a selling momentum, the first level approach could be the S1 1636.90 support line. Then lower could be the S2 1623.40 support level that was tested twice on the 20th and 21st of the current month, but it was broken to the upside eventually. Yet our last support line is the S3 1610.30, which was tested constantly from the 19th to the 20th, when again it was broken for the instrument to start its latest run as indicated before. The RSI indicator below our chart is currently below the reading of 70, where it was for 3 sessions, and is now indicating that some stabilization may be taking place. We hope that you may have found something useful in this report, which you can use for your trading. From all of us here at IronFX, best wishes for solid trading.